Okay, let's unpack this. Today we're digging into a, a really comprehensive source, the Canadian CPA Handbook by Ahmed Khorshid. It's presented almost like a roadmap, through all the complexities of Canadian accounting. So our mission really in this deep dive is to sift through it, pull out the crucial insights, maybe some surprising facts too, to help you get really well informed. And it covers a huge range actually, from like the basics right up to emerging stuff like data analytics and ESG, shows how much things have changed.
Yeah, and what's interesting about it, I think, is that it's not just a textbook or a dry reference guide.
Hmm.
It's really designed to be, well, indispensable for CPA candidates, right? But also a solid refresher for professionals already in the field, and even a good foundation for students. It really tries to demystify things, financial reporting, tax, audit, even newer areas like forensic accounting. It aims to make it accessible, practical, and, exam-focused too. So hopefully by the end of this, you'll have a much clearer picture of the whole Canadian CPA landscape. It's pretty dynamic.
It really is. The handbook definitely highlights how that role, the chartered professional accountant, has really transformed. It's so much more than just crunching numbers now.
No.
What do you see as maybe the most significant part of that evolution for the designation itself?
Well, connecting it to the bigger picture, I'd say one of the most interesting things was that major unification back in 2013. You had three legacy bodies: the CAs, who were mainly focused on audit, the CMAs, more into management accounting, and the CGAs, often emphasizing tax, and they all merged under the single CPA Canada banner. This wasn't just like combining logos. It fundamentally repositioned CPAs, made them more like holistic business advisors, not just,
Hmm.
compliance people.
Right.
It's really how Canada made its accounting credential a global powerhouse, actually.
Hmm.
Strategic partners, not just scorekeepers. And you get that global recognition reciprocity agreements.
That sounds like a massive strategic shift, but I wonder, did merging like that dilute any of the specialized strengths? The audit focus of the CAs or the management side of CMAs? Or was it purely a gain? That's a fair question. But I'd say it was overwhelmingly a gain. I mean, specializations definitely still exist within the profession, but the unified designation gives everyone a much broader, more comprehensive baseline of skills. And for anyone curious about, how you actually become a CPA now, it's quite a path. You need the prerequisite education, obviously. Then there's the CPA Professional Education Program, the PEP. That's like their specialized grad level training. It has core modules, financial reporting and audit, management, accounting, and finance, stuff like that. Then electives. And it all culminates in the common final examination, the CFE, which is, it's a beast, a marathon exam.
Right? The CFE. Heard about that.
Yeah. And it's not just exams. There's also a 30-month practical experience requirement. So it's theory and practice.
Okay, so with this unified approach, this broad training,
Mm.
what core skills are they really prioritizing now? What does the handbook highlight? The CPA competency map, which is outlined in the handbook, it really goes beyond what maybe people traditionally think of as accounting. Sure, you've got financial reporting, management strategy, audit, insurance, taxation, the cornerstones,
Hmm.
but it also explicitly includes things like data analytics, modern necessities, really. It's this holistic approach that aims to prepare CPAs to be trusted advisors, leaders,
Yeah.
in public practice, in corporations, equipped with a really broad skill set.
Okay, so technical skills are broad, but the handbook you mentioned goes deeper. It really emphasizes professional ethics and conduct, and not just in theory, right? It uses a case study to show these tough, real-world dilemmas. It kind of underscores how CPAs can be that last line of defense for public trust in the financial system.
Oh, absolutely. That's critical. The case study they use is called Conflicting Loyalties, Client Demands versus Professional Integrity. It describes a scenario, right? A CPA auditing company, Green Growth Ltd., they find a material misstatement. The CFO capitalized like $500,000 of operating expenses. Basically cooked the books to inflate profits.
Hmm.
Yeah. And then the CFO pressures the auditor, threatens to switch firms, mentions layoffs might happen if the error gets corrected.
Hmm.
Real pressure tactics. So the ethical issues are just boom, right there. Professional independence is under threat. The need to prioritize public interest over the client's immediate demands. And it's a clear violation, of course,
Yeah.
the CPA code and IFRS standards.
Mm-hmm.
The handbook uses this to prompt discussion, stakeholder analysis, who's affected, ethical frameworks, utilitarian versus deontological ways of thinking about it, and practical steps like, do you refuse to sign the audit report, escalate internally, resign from the engagement, and it points to specific rules in the CPA code. Rule 204 on threats, like intimidation. Rule 206 on disclosing noncompliance. And that overarching public interest principle, it all comes into play.
That is an incredible amount of pressure. Gosh, it really makes you appreciate The tightrope CPAs have to walk sometimes. I can only imagine the sleepless nights making some of those calls. So yeah, it's definitely not just about finding errors, it's about integrity, making those tough calls to protect the public. And that trust, built on ethics, relies heavily on the rules they follow, right? The accounting standards themselves, which, as the handbook shows, have their own complexities. Like you mentioned, Canada has two main frameworks, ASPE and IFRS. Why two? And what's the big difference for, say, a business or an investor looking at the financials?
Yeah, that's a great question. And it's a really important strategic choice for a lot of Canadian companies. So ASPE, that stands for Accounting Standards for Private Enterprises. It's generally simpler, designed for private companies,
Yeah.
less complex disclosure requirements, things like that. Then you have IFRS International Financial Reporting Standards. These are mandatory for publicly accountable entities, like companies listed on a stock exchange. And they align Canada with global standards.
Mm-hmm.
The differences can be really substantial. Take revenue recognition. IFRS uses this principles-based five-step model. ASPE can sometimes be a bit more industry-specific or rules-based in certain areas. But maybe one of the most visually impactful differences, especially on the balance sheet, that's leases. And maybe goodwill, too.
Leases. Okay, tell us more about that. Sounds like it could really change the numbers.
Well, it absolutely does. Under IFRS 16, which is the relevant standard, almost all leases have to go on the balance sheet. Even simple operating leases like renting office space or equipment stuff, they used to just be an expense on the income statement. Now, under IFRS, you record a right-of-use asset and a corresponding lease liability.
Everything. Wow.
Pretty much everything over a certain threshold, yeah. This can significantly bulk up the balance sheet, and it impacts key ratios, like debt to equity, makes companies look potentially more leveraged. ASPE, in contrast, still allows those operating leases to stay off the balance sheet. The handbook actually uses a case study. Urban Retail Co., a mid-sized retailer, 50 stores. When they switched from ASPE to IFRS 16, their balance sheet shot up by $18.4 million, just from capitalizing those store leases.
$18.4 million, just from a change in accounting standard.
Exactly. Shows you how crucial it is for investors, for lenders, to understand which set of standards a company is using. Right. It completely changes the financial picture sometimes.
That's incredible. A single standard moving millions onto the balance sheet. Okay, and you mentioned goodwill, too. What's the difference there?
Right, goodwill. So when one company buys another for more than its identifiable net assets are worth, that extra amount is goodwill. Under ASPE, companies are generally allowed to amortize that goodwill, basically, write it down gradually as an expense over a set period, maybe 10 years. Creates a predictable expense. IFRS, though, says no amortization. Instead, companies have to test that goodwill for impairment every single year.
Impairment test.
Yeah, they have to check if the value of the business they bought has dropped. If it has, and the goodwill is considered impaired, they might have to take a big, potentially sudden write-off.
So less predictable under IFRS. Could lead to bigger swings in reported profit.
Potentially, yeah.
Hmm.
If there's an impairment, it can be a significant hit to earnings in that year. So different approaches, different impacts on the financial statements, it highlights that complexity again.
Definitely complex. Okay, so we have the standards, the ethics. But who's making sure companies actually follow these rules internally? Who's watching the watchers, so to speak? The handbook covers internal controls and auditing, right? Protecting against errors and, crucially, fraud.
Yes, vital stuff. Internal controls are basically the policies and procedures a company puts in place to ensure reliable financial reporting, safeguard assets, prevent fraud, all that good stuff. There's a widely accepted framework, the COSO framework, that the handbook touches on. It's kind of the gold standard for designing and evaluating controls. It breaks it down into 5 components. The control environment, that's the tone at the top, management's attitude towards controls, risk assessment, figuring out where things could go wrong, then control activities, the actual checks and balances, like approvals, reconciliations, segregation of duties, information and communication, making sure the right info flows, and finally, monitoring, checking that the controls are actually working over time.
Okay, the COSO framework, and what happens when those controls, well, fail?
Yeah, when they fail, the consequences can be severe. The handbook mentions the classic example, Enron. That was a catastrophic failure of internal controls, particularly around things like segregation of duties and oversight, led to massive fraudulent financial reporting. I mean, even in less dramatic cases, I remember early in my career seeing how seemingly small control weaknesses, if the tone at the top wasn't strong, could just snowball into significant risks.
Yeah.
It really matters.
Yeah, Enron is definitely the cautionary tale, and that Failure leads us to the auditors, right? The independent check. Their role is to provide that reasonable assurance that the financial statements are free from material misstatement using professional skepticism. It's that essential layer of public trust.
Exactly. Professional skepticism is key there,
Ah.
not taking things at face value.
Right. Okay, shifting gears slightly, but still very practical. Taxes. Everyone deals with taxes. The handbook gets into Canadian taxation, personal, corporate, GST. What's maybe one of the trickier distinctions you see businesses grapple with there? I've heard the difference between zero-rated and exempt supplies for GST can be confusing.
Oh, you're absolutely right. That distinction trips up a lot of businesses, and it's really crucial for cash flow and compliance. So zero-rated supplies, think basic groceries, prescription drugs, exports, they technically have a GST rate of 0%. The key thing is businesses selling zero-rated supplies can still claim input tax credits, or ITCs. Those are the credits for the GST they paid on their own business expenses.
Okay, so 0% tax out, but you get credits back for tax you paid on inputs.
Exactly. Now, exempt supplies, things like residential rent, most healthcare services, financial services, there's no GST charged on the sale either. But, and this is the critical difference, businesses making exempt supplies generally cannot claim ITCs on expenses related to providing those supplies.
Ah, okay. No tax out, but also no credits back. That makes a difference to the bottom line.
It really does. The handbook uses a good practical example. A small bakery in Nova Scotia. Let's say its sales cross the $30,000 threshold in a year, making it no longer a small supplier. It must register for GST, usually within 29 days after the end of the quarter where it crossed that threshold. If it doesn't, there are penalties. And then it needs to figure out which of its sales are taxable, which are zero-rated, like plain bread, and maybe, if any, are exempt, though that's less common for a bakery. And manage those ITCs correctly. It's not just about collecting, it's managing the whole system.
Got it. So details like that really matter. It's clear the handbook covers the traditional ground really well. But what I find fascinating is how it also folds in all the contemporary issues. It's not stuck in the past. It talks about tax impact, data analytics, sustainability, ESG reporting, even forensic accounting. It shows accounting isn't static at all, is it?
Not at all. It's constantly evolving, and the handbook reflects that, including chapters on IT and accounting, data analytics, sustainability, and ESG reporting, with updates reflecting changes right up to 2024. It really underscores that CPAs today need skills way beyond traditional bookkeeping. They're engaging with AI, with blockchain, with these critical environmental and social metrics. The handbook is definitely trying to equip them for the future of finance, which is already here in many ways.
What a journey through this Canadian CPA handbook. Seriously, from understanding that huge strategic unification of the CPA designation and those deep ethical calls they have to make, to the honestly fascinating differences between ASPE and IFRS and how that shifts millions on a balance sheet, and then the practicalities of tax, internal controls. It really shows how comprehensive and, frankly, critical this field is. The handbook definitely delivers on being a roadmap, I think, guiding you through the maze, demystifying things with examples like that green growth ethics case or the bakery needing to register for HST. Hopefully you listening feel you've got some surprising insights now and a much clearer handle on this essential profession.
Yeah, and thinking about all this dynamism, it brings up a pretty important question, doesn't it? Given how fast things are changing, new tech like AI, evolving reporting standards like ESG, how might the skills and even the core roles of Canadian CPAs continue to transform over, say, the next decade? Think about AI-driven audits or truly integrated sustainability reporting. What will that demand of them? It's definitely something to mull over, whether you're in the profession, studying, or just interested.
That's a great question to leave us with. Lots to think about there. Okay, that's all for this deep dive. Until next time, keep digging into the fascinating world around you.